Hello, and welcome to the April Commonwealth Financial Network Market Update. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. All I can say about the first quarter was wow. The economy continued to strengthen. The stock markets did very, very well during the first quarter around the world, and things continued to get better. Let's start with the financial markets. Here in the U.S., March actually was a bit of a break. The larger companies, the Dow and the S&P indices, kind of bounced around flat. One was a little bit above, one was a little bit below. But smaller companies, the NASDAQ, actually did very well for the month, up almost 1.5%. Internationally, financial markets also did very well. Both the developed markets and the emerging markets grew strongly both for the month and for the quarter. From a financial market perspective, it was a decent month, it was a great quarter. And the question is, A, why? And B, is that likely to continue? The reason why is substantially the economy continues to improve, both here in the U.S. and outside. Let's start with the U.S. We saw fourth quarter economic growth revised upwards from 1.9 to 2.1%, which may not seem like a lot, but it does indicate that even at the end of last year, even with all of the politics, all of the concern, things actually were pretty good shape and much better than expected. Around the world, we're seeing economics improve, and it's the first synchronized upturn we've seen since the financial crisis. Europe is growing again. Part of that's due to quantitative easing there, which continues, but part of it is also due to improving sentiment. Internationally, if you look at emerging markets, they're benefiting much better. The dollar has stopped going up, which helps. The U.S. is settling down economically, which helps more. In other words, globally, economics are very positive, which supports financial markets. We're also seeing improvements in the fundamentals that drive markets directly. Corporate earnings are going to be up, we expect, for the third quarter in a row, and up almost 10% in the first quarter. That's big. We haven't seen that in a long time. So the news is not only good, but it's translating into the markets, and that's likely to continue. So what do we need to worry about? One word: politics. Here in the U.S., we've actually weathered political concerns quite well. You can argue that's perhaps why March was a bit of a slow month, but nonetheless, we're seeing markets continue to respond to economics rather than politics. There's a lot of political news that's already priced in, so I'm less worried about that going forward. Internationally, the big risk factor is Europe, and there we got some good news. The Dutch elections went much better than expected from a political stability perspective, and that's also likely to carry through into other coming European elections, which is very helpful. We did get Brexit, but again, that's something that had much less of an impact than was anticipated, and that's also good news. That's some uncertainty that's resolved. So looking forward, the picture is actually quite positive. The economy continues to improve, U.S. consumer and business confidence is rising, and often what we see is the stock market follow that. Do we have concerns? Of course we do. One of them is that hard data is not as good as the actual survey data, and we need to see how that resolves. So at the moment, things actually look pretty good, but as always, we will see. And I'll talk to you next month. Thanks for watching.